I just don't get it. Gold at a record high, but we're looking for higher for longer from the Fed, and tech continues to outperform on a relative basis. What is up with that?
Well, it's quite interesting. I remember I was pretty positive towards gold right after the pandemic when I saw money supply expanding and inflation, and it just languished for so long. And what did everyone go into? Bitcoin. And then I sort of concluded that, Bitcoin is the millennials' gold. They don't care about gold. It's going to languish. But the truth of the matter is gold has a 5,000-year history of value, and it's going to rise with prices. It's going to rise with inflation. So what I think you have is really a catch-up from a lagging early performance in this inflationary cycle to catch up to other commodities and other prices.
When you look at some of the other commodities out there, Professor, particularly the ones that traditionally have been associated with economic cycles here, are we still seeing those same correlations? Can equity investors still sort of be dependent on some of the signals coming out of that space?
Well, I look sensitive commodity prices, and your Bloomberg commodity price index is on my home screen. It's a very sensitive indicator to not only inflationary trends, but also real strength in the world economy. And as we know, that had been in a downtrend for almost a year, and about 3 or 4 months ago broke the downtrend, stabilized, and is now moving up. Now, I'm not saying it's a threat. I don't see an inflationary flare here or anything like that. But we do have to acknowledge that the commodity prices, which, peaked out after the Russian invasion of Ukraine and have been going down for almost 2 years, has broken out from its downturn and has turned upward. I think it's a strength of the economy just as much as it is any inflationary pressures.